May profits be upon you. Welcome to another weekly Forex forecast. We're looking at the US dollar index. As usual, that's what we start with. But just know that I'll be putting out a bunch of videos right after this. I didn't put out much. I put out maybe 3 videos last week. And I mean, I had to travel suddenly uh, out of the blue. I had to travel, so I couldn't finish the rest of them. But today, I'll make sure I get them out early as opposed to putting them out normally on Sunday. I'm putting them out Saturday evening. All right. Let's go. Monthly on the US dollar index. You can see what I've been saying for the last few months, last several months, is that what we see is the market moving in higher highs and higher lows, higher highs and right now we're at a higher low relative to this one, and this could be a potential higher low if it breaks this high. Okay, so uh structural wise, all right, the swing low, swing high, swing low, swing high on the monthly, we are really bullish. I'm sorry, bullish, because we broke market structure here, broke this high and then pull back. All right. All of this could just be a pullback, a correction to this impulsive move, a correction to that impulsive move. That gives this the potential of making the next higher low for the next higher high. All right. But over the last, since 2025, since last year, January, we've been bearish. The momentum has been bearish, and you can see that we have a shown of structure break there. All right. Now, what kind of structure is that? These are internal highs. They're internal because this is the low, this is the high of the range. Everything inside is internal. Okay. And we broke that. We broke that those internal lows, and that's a pretty significant uh, break of internal lows because we've been bearish and then moving sideways since, right? And you can see that we are in an ascending channel here, all right? And I'm just marking the structure. So it's very interesting to watch this. I've been thinking that we would start to see the market move, start to gather up and form that reversal pattern. But we seem to be going lower. And if we take a closer look into this movement here on the monthly time frame, you can see we close below this support line of the ascending channel, and then the next month, all right, in the month of February, so far we are bearish. Now, what do I always say about these wicks, these shadows? I always say if we trade below that 50% of the range of this wick, that would be a bearish indication. So far, the market is respecting it, and we come down, uh, relatively close to it, but we there's plenty of distance in between it, and this candle is still forming. We could definitely turn up, but the fact that we are trading below that ascending the support line of the ascending channel, that's not a great look. That if we're looking to for the market to turn bullish, this looks bearish. Period. All right. If we go to the weekly, what we can see is last week we closed the week very bearish, and that's below the range, the entire range of the previous week. That is a bearish indication. Now, we are still above the 50% of the big wick on the weekly time frame. This is the weekly time frame. All right. And that's why I got this little handle here. This pointing at this doggone 50%. Now you can see the market swept that sell side liquidity down here with this wick, and we've been trying to the market's been trying to push back since to to correct this very aggressive move to the downside. This was an aggressive response, but since we made that, it's looks like we are heading into consolidation, which is what I told you we can expect after an aggressive move like that. We'll probably stay down here for a minute before if the next move higher or lower. Probably, settle down and look for a move higher or lower. We're looking for a breakout, but we are still above this 50%, and the market is holding that so far. But this is a bearish move. All right, that bearish close below the low means that we'll probably be trading towards this low upon the open of the next candle. We'll probably trade towards that low. All right, there's higher probabilities we will trade towards that low before we even think about going to that high. You understand? That's the next candle theory, right? Now, if we go down to the daily, what do we see? This is a fair value gap to include the volume imbalance or the price gap here, right? This was when tariffs were announced and all that good stuff, and then we finally recovered from it, right? But here is that bearish fair value gap, and you're looking for the market to come in here and waiting to see if it's going to be respected or disrespected. The market shows that it was respected, and we closed below that fair value gap. All right. And what I want you to also notice is there was a bullish fair value gap as the market traded up into this fair value gap, right? And when the market came back towards this bullish fair value gap here, it held. It's been holding and it's been moving sideways. Yeah, we had a nice move on Monday, a nice move down. You saw the displacement forming a bearish fair value gap. The market on Tuesday's candle came back into that bearish fair value gap. And I'm talking about this one. Let me make sure you see it. This one right here. This is the one we already had a reaction to, the larger one. All right. This is the one that the market is vacillating between the bullish fair value gap underneath and the bearish one over top. All right. Which way is it going to go? I don't know. But what we're looking for is the market's reaction to them. All right. If the bearish fair value gap holds, that the market's going to head down. This looks like it wants to drop. This looks bearish. Look at the low here. We have the strong move up and then an impulsive move down, a very aggressive impulsive move down. And then we see the recovery, right? And this is an OTE level. You put your Fibonacci on here, you'll see this is the 50%. This is right around the 68 to 68%. What is that? Doggone it. Let me just put it on there. 618% is what I'm thinking of. All right. And boom. All right. 618. Exactly. Boom. Right. And then the market drops from there. An engulfing kind of move. Right. And then we settle here. Are we going any higher? I don't know. We are trading below that support line of the larger ascending channel, and we are moving sideways. This is not the time to jump into trades. This is the time to sit back and watch. Sit on your hands and watch. Wait until a sweep of that high or low happens. If the market breaks that high, if we go up and break that high, then I feel confident because we are above the ascending trend line, the ascending channel. We're above the support line of that ascending channel. We're back in this range, right? I would be looking to take aim at these highs if we break this high. What I'm thinking is More probable by a small degree is we break lower and attack this low, because the only job of a low is to make a new high. If we're not making a new high, this becomes a target for liquidity. And I would think we would be going down towards this low. All right. But what we need to see is a break and close below this low. Now, again, here is that I'm gonna blow it up a little bit. Here is the that 50% of the wick that I showed you in the higher time frames. If the market, you start to see the market close below that low, you better know that we are heading that way. We're heading this way. And the reason why I always start out with the US dollar is because it tells you what you need to do with the Euro USD, the Pound USD, the New Zealand Dollar USD, USD CAD, USD Swiss, USD JPY, the yen, all right, and the Aussie dollar, US dollar. You need to know if the market, if the US dollar is strong or not. Right now, it's weak, all right, and it's moving sideways, bearish neutral, all right. Uh, and if it continues, if we see some continuation to the downside, you'll know if it breaks that 50%, all right, which is right at uh what is this? Right at around 96, call it 96.30, 96.30. If you start to see a break and close below that, you know we're heading down lower. That means you want to buy the Euro USD, the Pound USD. All right. You want to buy the New Zealand dollar USD. You understand? You want to buy against that weak dollar. All right. So uh, that's it. You understand where I'm at? I'm leaning towards bearishness because that's the way this market is moving. Lower low, lower high, lower low, lower high. I'm expecting a lower low to happen. I'm expecting that lower low to happen. But I'm waiting because the market is in consolidation. So you don't want to jump into anything until it tilts, until it shows its hand. All right. And again, if the market breaks, I'll draw it so you'll remember it. The market breaks that high. This is going to be our target, and we can look for the market, the U.S. dollar to gain strength. All right. If the market gets below the 50% of that wick, if we close below that, this will be our target. Got it? Just wait until it breaks and closes above or below that consolidation. That's all I got for you. Next one will be the Euro USD, and I will see you there. May profits be upon you.